Welcome back to Market Sense. Now, let's get into that market news now. Asian markets started with no fresh news on the China-US trade front, and that's as investors turn their attention then further to the weaknesses in the global economy. Now, worldwide growth forecasts downgrade from the Organization for Economic Cooperation and Development, that's the OECD, and of course, weaker than expected private US jobs data out in the United States did help send Wall Street lower and dragged on Asian sentiment. Now, Japan's Nikkei index closed down 0.2% at 21,456. The Hang Seng index was down around 0.8% to 28,779. China's main index, the Shanghai Composite, closing up 0.1%, 3,146 points. Taking a look at things out in the United States, and Wall Street's main stock indices fell for a third session on Wednesday. And that came as healthcare and energy shares slumped and investors sought reasons to buy. And that's after the market's strong rally to start the year. Now, the Dow Jones Industrial Average fell 0.5%, and that's to 25,673, the S&P 500, as well losing 0.2% to sit at 2,771 points. The Nasdaq Composite dropping almost 1%. 7,505 points. All that sense of negativity has clearly filtered through into the South African market now as well. And as you can see, things are going to certainly look a little more negative as you take a look at how the market's performing. 0.1% lower for now is how the JSE is sitting. Out in Europe, things are looking just as negative as well. So it seems to be a topsy-turvy day across the board. The FTSE index is down around 0.5% as well out in London. Let's unpack exactly how those numbers are faring, and we'll get into the gist of it in just a bit. Well, let's get to that market picture now. Chantel Marks from FNB Wealth and Investments joins us on now from the JSE. Chantel, thank you so much for the time. Let's talk about just a slight bit of negativity. Not really much to write home about, but you can see across the board it seems to have been a negative day.
Yeah, risk on sentiment seems to have returned to global markets, and it's specific to geopolitical issues. So the trade war scenario between the US and China is no closer to being resolved, it seems, as well as the Brexit standoff between the UK and the EU. They just don't seem to be making any sort of progress. Out in the US, it seemed as if the US are kind of pushing a deal, whereas China is a little bit more offhandish, which has also kind of spooked investment markets. And then also news that Huawei is fighting back against a ban by US intelligence agencies on using its hardware across their operations.
I would have thought that with negative news out of the United States, the rand would perhaps perform a little bit better. But it seems, there we go, 14.33 against that US dollar. It's not anything local, is it?
Well, I mean, I think it's general risk of sentiment. So even though kind of dovish sentiment out of the US Federal Reserve and weaker US data usually pointing to a kind of more measured approach by central bank policymakers, usually leads to a softer dollar and a stronger rand. Because it's risk off globally, the rand is also being sold off in line with most emerging market currencies. Trade deficit numbers did come out earlier today, but that was actually slightly better than expected. The surplus we recorded in the third quarter of last year was actually larger than initially anticipated. So I don't think it's anything domestic at this point in time.
Nothing matters more today than possibly that MTN set of earnings that were probably scrutinized head to toe. 85% up in earnings. Just to look at that in isolation would be really, really good. But taking it on from a low base, it's not that great, is it?
Yeah, so the market was actually looking for a better result out of MTN initially. They did put out a trading statement a week or two ago, just guiding for these numbers that we saw today. Part of the reason is that they have had to make some inflation or currency adjustments in some of their bigger markets. And also remember that they had to pay a settlement to the Central Bank of Nigeria on their latest standoff with regulators in that market. It recovers off a relatively low base because they had that massive penalty that they had to pay in Nigeria regarding the kind of the registration of SIM cards a few years back. So we were initially expecting a much larger recovery. And if you strip out whatever weighed on, whatever once-off factors weighed on the result this time around, it was actually slightly better than anticipated. And what also was quite surprising and supportive of MTN in current markets was firstly the fact that they are quite positive on the outlook for the business operationally. General operations performed quite well, particularly in their largest markets, Nigeria, South Africa, and then slightly smaller markets, but still significant, Uganda and Ghana. And they managed to pay out a R5 dividend for the full year, which was also positively received by the market and places them on a historic yield of close to 7%.
Yeah.
Well, look, prior to the 14% increase in the share price this morning.
Yeah. Look, so it has been on its longest free fall for quite some time now. But at 87.34 rand, could it be value for money?
Well, it certainly seems that way. I mean, even if you count in the move today, you would still see it trading at a discount relative to its peer group when you look at kind of relative valuations, including a price to earnings ratio. I think the risk with MTN is that some of the markets in which they operate are quite tricky, and you never know when you're going to get another similar situation play out as did in Nigeria over the last few years. I mean, even in Iran, although operations seem to be progressing smoothly, you have the overhang from Turkcell litigation, along with the fact that there are sanctions against that country, and they're actually struggling to get cash out of Iran. They probably won't get anything out there this year. That's their third largest market. So there is a lot more risk embedded in MTN than there are in the other players.
Yeah. What about that Standard Bank number then as well? I mean, that's been a bank that you've looked at to be probably the biggest on the African continent at some stage. Now, by market value, it gets surpassed by First Rand and the like, and it's slowly just sort of just trundling along. What do you make of the company?
So, I mean, in terms of this specific result, it was actually slightly better than expected from a headline earnings per share perspective. But revenue was actually quite disappointing. And the beat was actually driven by low impairments, so kind of a better credit experience that they had. In terms of asset growth, it has been quite slow. I recall it was about 2.5% this year. I stand to be corrected on that. I looked at the results quite briefly. But yeah, overall, it seemed like quite a mixed result. We did, however, see some pretty strong growth in personal lines. And the disappointment on the top line seems to have come mostly from the corporate and investment bank.
Yeah.
Standard Bank is a high quality operation, and we still kind of like it from a long-term perspective. And in terms of execution in a very tricky Africa ex-South Africa market, they have been best of breed.
Yeah.
So we expect them to continue along that path.
Yeah, and then very quickly we have Sanlam as well. Earnings going down 8%. The CEO, Ian Kirk, saying that hopefully things can recover with a recovery in South Africa's economy and hopefully a better mark for the JSE this year. You tend to agree with that?
Yeah, the underlying operational result really wasn't too bad. Their performance from operations was up by 4%. What dragged on the bottom line for Sanlam specifically were weak investment markets. So what they do is they actually invest the premiums that they get from clients in order to deliver growth so that they can actually pay out clients when they need to. And the investment markets globally have been quite weak. weak. And in South Africa, in particular, investment markets have been performing very poorly. And that had an adverse impact on their investment returns. In terms of new business, it actually grew quite strongly, particularly in the lower income segment of the market. Their tie-up with Capitec has been very positive. But because most of the growth has come from the lower segment, it has had an impact on their new business margins. Something else to kind of look out for would be Saham Finances, which is its big acquisition that it made in the rest of Africa. That business underperformed for the period under review, but again, that was mostly based on investment returns on shareholder portfolios, which should turn around if we can see a turnaround in global markets.
Chantal, always appreciate your time. It's been an interesting time with regards to this earnings season, and we'll hopefully get a whole lot more through it as well. Thank you so much for that. Clearly, investors for now liking MTN. Standard Bank, however, suffering just a bit. Naspers as well, down today. British American Tobacco is continuing what has been a positive spin of late. That was Chantal Marks from FNB Wealth and Investments. Now, a whole lot still happening in the world of markets, economy and finance, of course. Even the South African Reserve Bank speaking out as well. We've had reserves data. And of course, as I said, the earnings out of MTN and Sanlam. We'll unpack all of those right after the short break. Do stay tuned.